Welcome to the ninth episode of Dividend Investing Insights, your one stop for all things dividend investing. Join us as we explore tips and techniques to maximize your dividends and help you grow as a dividend investor. In the episode today, we will start creating a stock portfolio, and over the next few weeks, we'll invest 10,000 US dollars and see track as to how our in portfolio is investing. However, before we go into the episode, let's look at the performance of the markets for the week. S&P 500 over the last 1 week gained 1.5%, 1.56%. Nasdaq 2 gained 2.13%, and here in Australia, ASX 200 gained 1.35% to end at 8,209.5 points. All of this was driven by the larger than expected 50 basis points federal rate cut announced by the US agencies. This comes as a positive news, at least in the short term. Over the last week, we have seen since the announcement has been made that markets have moved forward, and hopefully, this gives way for a better economic situation through which we have been going, the bad economic situation that we have been going through for the past few years. Anyway, let's move ahead. So while creating a portfolio, I will call out a few things that we need to look at. The first and foremost, we being a dividend investor would want to invest in dividend stocks. So look at dividend stocks with high dividend yields. The second criteria and the most important criteria for us should be that these stocks should pass the dividend investing checklist test. And in the episode today, you will see as to how we apply the dividend investing checklist to one of the share that we have selected. And last and not the least, most important, since industries go through variation, it is very important that we have some diversification in our portfolio to allow the industry dynamics as they play out. Anyway, so we'll go ahead starting the portfolio, and this is, as a dividend investor, what you could do is you could look at what are the upcoming dividends. In the short term, we may want that there are some dividends as soon as we buy, there is a payout which gives a boost to our investment. So what you see is a list of some of the upcoming dividends. You'll see, next to the name of the company, the first company you see is Nucor, which has a ex dividend date of 27th of September, the payout date of 8th of November. It is paying out a dividend of 54 cents per share, and the dividend yield is 1.49% for this share. So going through this list, Medtronic, Danaher, Keurig Dr. Pepper, Ralph Lauren, I got attracted to Keurig Dr. Pepper, which has a ex dividend date of 27th of August, which is coming up later this in the coming week, has a payout date of 11th of October, is paying out 23 cents and has a dividend yield of 2.29%. So what we'll do today is, considering Keurig Dr. Pepper, apply it to our dividend investing checklist and see whether it passes the test, and is it a good dividend buy? Is it a good stock to buy? So as of this recording, Keurig Dr. Pepper has a market price of $37.46. One of the first, and going by our checklist, the first item in our checklist is, do you know the business of the company? Yes, I do. So Keurig Dr. Pepper, it is Dr. Pepper Snapple was a drink. Keurig was a drink manufacturer. It's a beverage manufacturer providing a number of variety of drinks, um, globally, not only in the US market but globally. So, and they make money selling these drinks. And given the trend of people jumping onto healthier drinks, Keurig Dr. Pepper seems to be a good investment for the long term. So yes, we understand the stock, we know the market price. Let's look at some of the other parameters. Another important parameter for us is the dividend yield. So what is the dividend yield of Keurig Dr. Pepper for this year? So in 2024, Keurig dear Dr. Pepper, Keurig Dr. Pepper, or KDP for short, is paying a dividend yield of 2.33% or 0.875 cents per share. Uh, Looking at that, I'll talk about it further in the episode, but till this time, I'm happy with this. 2.33% dividend yield is good. It is better than the interest that we get. And if we hold this stock for a long term, and if Keurig Dr. Pepper increases its dividend, our dividend yield will go up. Let's look at the PE ratio. So the PE ratio is a little bit higher than where we would be comfortable with. It is at 24.01, but not something out of control. A couple of episodes back, we saw how the technology stocks were performing, and they had PE ratio in excess of 50. So although higher, I would want it to be less than 20, although a little bit higher than where it should be, but not a deal breaker. Let's go ahead. Let's look at the PB ratio now. The PP ratio is a very healthy 2.06. Anything between 1 and 3 is good. So 2.06 falls right in the middle, and a very good PB ratio. Payout ratio is again a very good 55%. Anything between 30 and 70% is good. At 55%, this is a very good payout ratio. What this means is that of the overall profits, 45% of the profits are being reinvested into the business, which makes that they'll be able to spend more on R&D and grow the business, and maybe increase the dividend for us in the future. Let's look at, does now one very important thing for me is, does KDP have the ability to increase its dividend, and what has been its performance in the last 5 years? Let's look at the dividend for the last 5 years. Has it been growing? Has it been going down? Are there dividend traps? Let's look at that. So in 2020, KDP paid a dividend of 60 cents per share. It increased to 0.675 in 2021. It further increased to 0.775 cents per share in 2022. In 2023, it further increased it to 0.815, and in 2024, it is going to pay out a dividend of 0.875 cents per share. This is such a good chart to look at. It is progressively increasing the dividend, and you, as an investor with a payout ratio of 55%, should be comfortable that this would continue to increase this dividend in the years to come. So this chart looks very good. Now let us look at the last parameter, which is the financial health. Now, from a financial health perspective, let's look at the revenue for the last 4 years as to how it has performed in terms of revenue. Now, if I look at the last 4 years, it started its revenue from 11 billion, grew it to 12.6 billion in 2021, then went up to 14 billion in 2022, and completed 2023 at 14.8 billion. This is again a very good metric. It is increasing its revenue year on year. Let's look at the gross margin. How has its performance been on the gross margin? Now, if you look at the gross margin also has been increasing, which is very good, which means it grew from 6.4 million to 6.9 billion to 7.3 billion to 8 billion. And you will see that year on year from 2020 to 2023, it has increased its gross margin. Let's look at the last metric, which is EBITDA. EBITDA stands for earnings before income tax, depreciation, and amortization. So this takes into consideration all the liabilities, all the amortizations, all the depreciations of its assets, and everything. And the EBITDA does throw up a surprise. So if you look at it in 2020, it had an EBITDA of 3 billion, went up to 4 billion, 25% increase, which is very good. Then fell to 3.1 billion in 2022, and increased it again in 2023 to 3.9 billion. Now, in a normal situation, this would have been a cause of concern as to what is driving the 900 million of EBITDA drop year on year. But probably we can give it the benefit of doubt of COVID. And considering all the other parameters that we have seen, payout ratio, year on year increase in dividends, revenue growth, I think this is a buy. The only two parameters that were not going on well for this stock was the PE ratio at 24, and the EBITDA that went down in 2022 and went back up again. However, in the short term, we don't see an issue. So as of now, we'll consider it a buy. However, we should look at the 2024 performance on similar parameters, then 2025 performance on similar parameters. And if we see that this is not performing well, it could be a sign to sell this stock. Well, anyway, let's now come to our portfolio. So the first stock that we are selecting is KDB. And what I am recommending is that in our portfolio, we'll buy 50 KDP at 37.46 share, which makes a total investment of $1,873. Um, we will add more stocks to the portfolio until we get to 10K, $10,000, and then see the performance on a week to week basis, make adjustments to our portfolio and see how this goes. So that's all we had for the episode today. So if you are watching until now, thanks for watching. Subscribe to the channel and remember to use the dividend investing checklist for all buys that you want to do. Thanks a lot for watching and see you in an interesting episode next week again. Thank you very much.